Yo, it's Hublo back with another video. I know my picture's gonna be small on this one, it's because I don't want to be in the way of certain things on this slide, but we're gonna be getting into high impact news today. So if anybody doesn't know about high impact news, or this is your first time, your first introduction on knowing about high impact news when it comes to trading Forex or anything of the sorts, definitely this video is for you. Definitely like, subscribe, comment below. And if you guys need some references to anywhere where you guys want to look for any um, high impact news and things like that. Forex Factory. Um, we got pivot point, stuff like that for support and resistance. Definitely feel free to hit down below, and I'm going to leave those links below. So let's get right into it. So today we're going to be going over understanding high impact events, how news events impact price action. Should you trade news events knowing when and when not to trade, how to manage risk, and when to trade news. So, understanding high impact news events. So non NFP, non-farm payrolls. So U.S. job growth data. So when you see NFP, this is what it is. So U.S. job growth data, NFP reports and indicates the health of the labor market in the U.S. Um, USD pairs, stocks are volatile. NFP data can cause unpredictable market fluctuations. So anytime you see NFP, which is usually a red folder. This is high impact news. You'll definitely. It usually comes around. I think, yeah, it usually comes the first month, the first Friday of every month. Sometimes it could be the last, I believe. But most likely, always look out for it for the first Friday of each month. You have non-farm payroll, so definitely look out for that. That's a really high impact news folder and can affect certain markets that you guys will be trading in the market. So make sure you guys pay attention to that. CPI, Customer Price Index, inflation report. Sorry. So this is the report that lets you know what is the inflation percentage in our country. So inflation levels measures CPI, uh, quantifies price changes reflecting customer purchasing power. Fed rate decisions impacts. CPI influences interest rates, guiding monetary uh, policies adjustments. So make sure you guys take a note of this because CPI is definitely a real big important news. This is usually like a red or a yellow folder in Forex Factory, but it definitely is, medium, news. It doesn't always affect the news that much, but it can. So make sure you guys always pay attention to that as well. And we have interest rate decisions. So Federal Reserve, ECB, BOE, etc. The rate change decision. So central banks assist the economy to set interest rates. So spikes occur on rate surprises. Market volatility spikes with unexpected rate changes. So make sure that you guys are paying attention to interest rate decisions because it can definitely cause a fluctuation in price dramatically. How news events impact price action. So, pre-news anticipation. So, usually a lot of traders like to speculate and forecast what it can possibly do. No one really knows. Traders analyze predictions, adjusting positions before news releases. You always want to make sure that you're personally, me perspectively, I'm not in the market before news. Sometimes it really depends on what type of news it is, but if I kind of got a picture of what happened last time that news event came out, then sometimes it could kind of give you kind of like a 75, 50, chance of kind of like hitting it, which trading is 50-50 anyway, but it kind of gives you that 75% chance of like, you getting in your direction, especially if market structure is kind of like following that. But really, when it comes to news and high impact news, market structure does not give a damn. Anything could really happen. A stop loss cluster at key levels. So many traders set stop loss orders against or around significant support and resistance areas. So usually support and resistance is very keen. Like I said, the pivot points are very keen when it comes to pre-news anticipation. Sometimes price can definitely go to those support and resistance, those key areas, and could definitely be very great. Um, and it can be very detrimental as well. So make sure you guys use proper risk and make sure you guys are understanding what pivot points are specifically there for your uh, trade, your pair that you're trading. Every week, I put news in my chat and my Discord, so all my students are always prepared on what's going to be happening, so they can make their own conscious decisions based on the pairs that we'll be trading in Discord. So definitely, if you guys want to tap into our Discord, definitely do that. Because I put the news in there every week, so everybody's ready for the week. Post news, whipsaws, and liquidity grabs. So, intentional reaction spikes. So, news events can cause rapid price changes and volatility. Stop hunts before trends. Big players manipulate price to trigger stops and trends. So, you got to understand, we definitely got an institutional video out right now that allows you to understand a lot about stop hunts and the trends. So definitely feel free to tap into that video to learn a little bit more about that. But when it comes to post news trading, you got to really understand that uh, you got to be very careful. It's very wise to use precaution before, during, and sometimes after high impact news comes into the market. So, should you trade news events, knowing when and when not to? So, avoiding trading news if you have no strategy. That's a big one. If you don't have a strategy for how you're going to capitalize on the news event, I definitely would not place that trade. I wouldn't put a buy stop. I wouldn't put nothing in. Close your laptop, lock your phone, put it away, do something because you're going to lose money. Trading without a plan can cause major losses. Lower your risk. Avoid trading during unpredictable news for stability. So if you want stability in your trading, you want consistency in your trading, make sure you lower your risk at those times just so you can save your account and not do yourself a disservice by having to, feel like you have to, get money back that, you lost from just being unwise with your capital. Stop loss. So tight stops can trigger easily during volatile news. So if you have a tight stop loss, it definitely could trigger very easily. You got to make sure that your trade can breathe, and the low risk and the stop loss definitely go hand in hand. If you have low risk, you can extend your stop loss a little bit more, and then as price kind of corrects itself or news ends up, playing out a bit, you can kind of, scale into that position that you're already in if it's still continuing to go your way. Trade news, cautiously if. So you're going to want to trade cautiously if you have liquidity grabs and smart money. Major players shape market trends during news events. We do have the institutional video out now. Like I said, definitely refer to that for more information on how to go about, trading with the big players. Wide stops, small lots. So this is a big one. Wide stops, small lots. So you're gonna want to wide stop loss and smaller positions help reduce large amounts of losses when it comes to price fluctuations during those news events. So post news market check, analyze market trends, post news for cleaner signals. So make sure you guys are understanding what's happening after that news comes into effect, just so you make sure you're not executing in something that wouldn't, be useful to you at that moment. Maybe you're gonna it's gonna need a day to kind of fluctuate and kind of consolidate, for it to gather whatever it has going on, so you could actually trade it properly. How to manage risk when trading news. Reduce size for volatility. Smaller positions help mitigate losses during unpredictable market movements. We just talked about that. Use wide stop losses, place stops beyond liquidity zones. So set your stop losses outside of areas where traders hunt liquidity. So make sure you guys are placing it at a high or a low where you feel like a stop hunts or liquidity wouldn't come to capture, or if even if it does, it wouldn't stop you out. A lot of these volatile times is really hard to do that only because spread sometimes can kind of widen. Where price doesn't come, spread will, and it could take you out as well. So make sure you guys are being aware of that to make sure you don't blow your accounts and lose, potentially a large portion of your account or all of it. Wait for market confirmations before entering. So avoid trading initial spikes. First reaction spikes can lead to unpredictable market movements. So making sure that you guys are avoiding trading those initial spikes. We do also talk about that in the institutional trading video. So make sure you guys tap into that video as well and get more knowledge on that. Monitor spread and slippage. This is a big one. During session breaks, during volatility, high impact news, monitoring spread and slippage can be very hard. Um, you definitely want to do that before, during, and after you guys get into a position when it comes to trading high impact news, because your spread could be 30 1 minute, and then once news hits, it could be 200 and something, and then after news, it could go down to like 150, or vice versa. It could be, high during news. Once the news, kind of dies down, it could get a little bit lower, but it's still not low enough to where you're capitalizing at a position that's feasible for your either your account size, or you're putting a lot of strain on your account due to the spread and slippage that's currently happening after a major news event. So making sure you guys are paying attention to that. Slippage is not really something you can really always control, but it does happen a lot, and you got to make sure that you're paying attention to that as well, because slippage is something in where you're probably already in the position, but the position kind of essentially kind of like slips away from you. The price kind of like goes past your stop loss, and like goes past like where you were attempting to exit out, and now you're in it for a lot more money than you were supposed to. Hopefully that goes your way, because then you'll be in profit, but it usually doesn't happen that way. Just from my experience, I've had a lot of trades where slippage has happened and it went past my stop loss, and I'm looking at my account like, you were supposed to stop me out. Like, why am I in this much drawdown? And it sucks. It doesn't feel good. And that's why, trading during news events is definitely something you want to be cautious of. So check spreads before major news. Monitoring spreads helps identify potential volatility risk and minimize slippage with limit orders. So limit orders ensure execution at desired prices, reducing losses. So you can use a buy stop, sell stop to just prevent slippage and whatnot, but a lot of things can still happen in between that time. Spread could activate you, and now you could be in a position where you're activated, but because of spread and where price is, price could be all the way below. And now you're in a position, that you got into a position up here because of spread, but now it puts you in the negative because price is really down here. So really you gotta, really take that into account and really understand that trading in high impact news is not always in your favor. You gotta really have a plan when it comes to doing it. And you gotta understand that there's a lot of risk that comes with that. And definitely, if you have any questions or concerns about any of this, definitely leave a comment below. Remember to like and subscribe if you've got made it all the way down to to the end of this video. I really appreciate you for watching. And if you guys need anything else, just feel free to let me know. Again, thanks for watching. I'm Hublo, and I'm out.